Everybody, Eric Monroe, financial advisor and employee benefit consultant. Today, I'm going to be speaking to plan sponsors, financial executives responsible for retirement plans, retirement plan administrators, and anybody involved in the retirement plan that you sponsor, and all the fees and the best way to pay for it. I've got some hints coming up that I think will be very beneficial that a lot of people don't know about. So here we go. This is a list of the majority of all the fees associated with a retirement plan. There might be some others, but here's the comprehensive list here. There are record-keeping fees. This is the companies like Vanguard or Fidelity or John Hancock or Voya. They're called record keepers. They charge a fee to manage that platform. Fiduciary fees. These are extra fees that are paid to protect the trustees of the plan and outsource the investment and the administration. Fiduciary responsibility. There's some fees with that as well. Advisor comp, I think you can figure that one out. There are investment fees. Those are the fees of each individual investment within the retirement plan. And then you have your TPA fees. They're doing the administration, the testing, the preparing the 5500 for you, sometimes filing it as well. And if it's a new plan, they might charge a setup and a design fee for you as well. If you're a large plan, a plan of 100 or more eligible employees, you might have an audit. That's a pretty large fee, but I can also show you how to reduce that as well. There are companies like Fidelity that charge a couple $1,000s to do enrollment and education fees. Some other providers charge a little bit less or none at all, but if you pay them, that's a fee. Legal fee accounting, ERISA bonds, loans, distributions, etc. But how are those fees typically paid? Most are billed direct. These are the ones with the check marks. Those, the plan sponsor gets a bill, they write a check, it goes out, the accountant gets that, and it is most of the time tax deductible. But what is not billed, typically speaking, are the record-keeping fees, the fiduciary fees, and advisor compensation. Those are actually paid from the assets in the plan. Every participant is taking a piece of this fee and paying it from their account pro rata. So, what I would say is, talk to your plan administrator, talk to your sponsor, and find out if you can bill, most will, the record-keeping fiduciary if there are any, and the advisor compensation, and here's why. These fees, too, could be tax deductible to the business. If they're getting taken out of the individual participant accounts, there's no opportunity to reduce taxes and get a deduction. Also, if you are a very large participant in the plan, if you're the business owner and you've got the majority of the assets, guess what? You're paying the majority of the bills as well. So you take that out, not only does your performance increase, but everybody else in the plan increases as well. So that does a couple things. One, increases your deduction to run a plan. Two, increases people's performance, participants' performance in the plan because the fees are lower. And three, you might even actually be able to reduce your fiduciary liability. If someone comes in and says, what are the fees in your plan? And you tell them the fees to the participants are simply the investment fees and that's it. And those investment fees are in line. Then there should be less opportunity for any issues going forward regarding the Department of Labor or the IRS that might question that. So, in summary, A, find out what exactly you're paying in all of your fees for your plan. Check back one of my videos I did on benchmarking. It's a great opportunity to take a look at your plan and compare it to your peers, and you can compare the fees that you're paying with the fees that your peers are paying, in addition to performance and some other factors as well. Benchmarking, very important, should be done on a regular basis. And I can also take a look at a plan for you as well and go through these fees and map them out. It's pretty easy to do that, and I can tell you based on my experience in the industry if these fees are reasonable, especially for the service that you're getting, or if there's opportunities to reduce those fees. And you could even maybe stay with who you have now, but pay less, and I can coach you and help you do that as well. So what people don't know, most employer sponsors don't know, is that you can actually take these out of the plan and pay for them themselves, have them billed directly to you. And that's the key. Make sure your plan is efficient and cost effective, and being able to make deductions is certainly going to get you to that step. So I really hope you enjoyed this, a little nugget. Please share and like. If you know somebody who sponsors a retirement plan, concerned about fees, if you're an accountant or another financial executive, this is great information to take back to your peers as well, or the companies that you work with. and show them a little bit of extra added value. So again, thank you very much.